Well, welcome everyone to CONOs HOA insurance seminar. We appreciate your coming tonight. We appreciate your interest. Tonight we have TJ Klassen, Personal Lines Account Executive with the Insurance Centers of America. She has been in the industry since 1984 and has spent the last 13 years with the Insurance Centers of America running the personal lines department. So welcome, TJ.
Thank you.
Rhonda Ashley, who is having some technical difficulties. I'm going to introduce her anyway, though. She's currently Vice President of Central Bank Insurance, CB Insurance HOA Department. It serves over 650 communities in Colorado. She's been active in the insurance industry and also educating HOAs throughout the state. She began her career in 1986, and prior to joining CB Insurance in 2014, she created and managed branded specialty programs for sports recreation and medical malpractice niches. So TJ, would you like people to wait till the end to ask questions, or would you like to people
It's such a small group, so feel free to stop me anytime. Being it's a small group, we got plenty of time. Jump in if you have a question or it's not making sense. I'll try not to bore you too much with too many things, but feel free to jump in anytime. I handle the unit owner insurance, which we call most of the time an HO6 policy in the insurance world. And you can be a unit owner, or you could own a unit and have it as a rental property. So there's a couple of different options there. Do you want to bring up the slides, Richard?
Sure.
I think it starts on slide 11 or 12. Perfect. And then I won't be on this slide long, and I'll just let you know when to change slides.
Okay, sounds good.
And so what I cover is the unit owner's portion. Anything that's not covered under the master HOA building policy. Sometimes that can be inside coverage. Sometimes it can include windows, doors, decks, that sort of thing. Every HOA has a little bit different way of handling their insurance, and every insurance company is a little different. So I'll briefly go through all of these. Since it's a small group, I'm going to really focus in on loss assessment. And if there's other things you'd like to talk about, please back me up and I'll come through it. So if you want to go to the next slide, Richard. Perfect. And I kind of put the primary unit owner with the landlord rental property side by side, because they are very similar in coverages as a unit owner, whether you live in it or it's a rental property. And how do you determine how much is needed? First and foremost, every unit owner needs to know what the master coverage is, or how to get access to the master certificate. Our insurance agency reaches out. Sometimes we have to go through the insurance carrier. Sometimes we can go through the HOA. Sometimes we just go direct to your management company. The management company usually will have it, and for the most part, most HOA management companies are very easy to get a hold of and access. Some unit owners have that where you can access it on your portal. Every unit owner has access to that. Sometimes they're there. Every HOA does it differently. But first and foremost, as I'm looking at insuring, I have to have a copy of that master certificate. Without that, I don't know exactly what you need as a unit owner for coverages, and that's a very important step. And we look at that every single year. It's so important because, as you know, the master insurance policies are changing drastically. Hail has changed things so much. Both can have you may need coverage for outside. There are some HOAs that every unit owner has to insure their building inside and outside, including the roofs. some don't. So they are a little bit different. I'm going to strictly stick with the HO6 policy today. Contents can vary. If you are a homeowner, we'll talk about your contents. If you're a landlord, we'll look at your contents. Most of the time, if you're a landlord, you usually only own maybe the refrigerator, stove, dishwasher, etc., and you only need to have insurance for that. So they're very similar, and dollar amount can change. Replacement cost estimate. We always run a replacement cost estimate on every HO6, depending on how much you need for inside flooring, windows, drywall, countertops, cupboards, all of that. So we look at that, and our companies will give us a replacement cost estimate based on square footage. And we also look at, do you have tile? Do you have hardwood? Do you have granite countertops? Do you have Formica countertops, tile? We look at any upgrades that may have been done since the original build. So we look at all of those things. Liability, very important. This is protecting your assets. Most of the time, we're recommending 300 to 500,000, depending on your assets. What all do you own? Is it a small unit? Do you have other properties? Do you have more assets? Are you retired? So we're looking at protecting those assets for you. Medical payments, that's a good faith for others, and that we normally keep at 5,000. That's that good faith. Should someone come to your house, slip and fall, invited, uninvited, they need an ambulance, they broke an arm, well, I can't go, I don't have insurance. Out of good faith, this is kind of helps prevent the liability. The most common deductible is $500. You can go higher, and as the insurance rates are starting to increase due to hail, we are seeing some folks looking at $1,000 deductible. But again, the most common at this point is the 500. Loss of use or loss of rent, some companies call it additional living expenses. This is, should you as a unit owner, if there's a fire in the building and you can't live in your unit, the insurance company under the HO6 policy will give you coverage to live elsewhere, depending on how long it takes to bring your unit back to being livable again. If it's a week, it may just be a hotel room. If it's going to be a month, it could be an apartment. If it's going to be a year, it might be another home or townhome, depending on the type of policy you have. And then, of course, loss of rents. If you're a landlord and your tenant can't live there and now you don't have income, this is to protect and get you your income while you're not being able to collect rents because they can't live there. Loss assessment. This is critical on every HO6 policy. As things are changing and progressing in hail, continuing to be a big deal. The loss assessment, the HOAs are having to assess each unit owner a portion of maybe that claim deductible, which the master claim deductible can be very high. So this is where we're seeing most claims paid out under loss assessment. And we're seeing any amounts from 5,000 to 35,000. There is an HOA out there now that each unit owner needs at least 80 to 85,000, if not more. So it's getting there. Most insurance policies will pay loss assessment in different ways. There are some companies out there that still, on a loss assessment, will only give you up to $1,000 on a claim deductible. What that means is your master policy has a claim deductible, and they have to meet it. That's why they're assessing you, is to cover that claim deductible. Maybe they've got a $800,000 claim deductible and they assess each unit owner. Well, there are some companies out there that if it's a claim deductible, the most they'll pay is $1,000. So it's very important to know if your policy that you have will cover that. All the companies that I and our agency quote, all will cover that. Another thing to know about loss assessment is some companies pay date by the date. Did you own the unit on or before the date of loss. Some companies will pay if it's the date of the assessment letter. So let's say we have a claim on June 1st. I purchase a unit July 1st. The HOA puts out an assessment letter, say December 1st, 6 months later. I didn't own the unit at the time of the loss. So there are some companies that say, well, you didn't own it, we're not paying. And then some companies will say, you owned the unit at the date of the loss assessment letter. So those are very critical, especially if you're purchasing a unit, especially on a rental or something like that. So you want to know, what does your policy cover? Those are very important pieces. Anyone have any questions or concerns about the loss assessment? Any stories you've heard that, yes, and I'm sorry.
Oh yeah, and my name is Marla. I'm not
Hi,
sure.
Marla.
My little tag says my the situation that I manage, which is
Perfect.
Bentry, and Bentry actually uses CB Insurance for their
Master.
insurance. So this HO6 is a supplemental to the master
Absolutely.
insurance. Okay, okay,
Yeah.
got it.
Yeah, and it's the unit owner's coverage. I can't tell you how many clients have come to me, and after I'm doing a review and telling me, oh, I bought a condo, I didn't think that I needed to insure it. There's an HOA covers me.
Right.
My realtor said, don't worry, the HOA covers me. I said, no, 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 the HOA is not protecting you. They're protecting their building. They're not protecting you. They're not giving you loss assessment. They're not providing you a liability coverage, and they're not providing you any contents coverage. During the fires, we've seen lots of people find out they had no HO6 insurance. They thought the HOA master policy covered them because they paid dues to an HOA, that just covered them for insurance. They did not understand. I can't tell you how many real estate agents advise their customers, don't worry, there's an HOA to cover you. Well, that's not true. We need to find out, what does the HOA master policy cover? So the HO6 covers you personally for your liability, your contents, and most importantly, that big loss assessment. Almost all policies that we write, even if you're with CB Insurance, and a lot of their policies, they still have where it covers all in, meaning their insurance policy will cover the drywall, the flooring, the countertops, the cupboards, all of that. We still put a dwelling coverage on the policy to protect any gaps of insurance. And there can be gaps.
Yeah.
There's sometimes the master policy will cover the building inside and out, but they'll exclude windows, doors, and decks. You need some dwelling coverage to cover that. And it just depends on how the HOA is, what insurance policy they have, what coverages they have, and what are their deductibles. So the loss assessment can be very misunderstood for so many times. So have you run into any issues or concerns in your HOA that you have right now that you've been hearing about?
No, well, we were single family dwellings, and so we don't have any HOA or HO6 coverage at all.
Okay.
So,
and so each unit owner, each homeowner has to get their own insurance. Is that how it works?
right. We
And
just
they
have
need
insurance over, and I actually have some questions about it because it's so confusing to me. But I'll ask those later. But
yeah. And so if your master policy covers the outside of all the homeowners, or does each homeowner have to cover their building inside and out?
yeah, inside and out they have coverage.
Then
Yes.
they each need an HO3 regular homeowners policy.
Ah, okay. Okay.
And there are some units that don't need a homeowners policy because they're all single family unit homes, but the HOA covers the buildings. And some of those also cover the inside. We're seeing more and more changes of master policies being rewritten at renewal with higher deductibles. And they're saying, well, we can't insure the inside dwelling. Each unit owner is going to need to do that. We write a lot of HO6 in our agency. I work very closely with Rhonda and her team. They write the building, we write the unit owners. And they do a great job. Everybody does an annual meeting generally for all unit owners. We encourage every one of our unit owners to always attend. And I know your attendance gets pretty low with those meetings. And
yeah, it can be.
I let
Especially
everyone
this
know.
year, there's no meeting. No,
Yeah, I said it's
never-
crucial that you attend these meetings or pay attention
Mhm.
to any information they're emailing you or sending you, because that can reflect on their own personal insurance. So the loss assessment can be very confusing, and I can tell you there are lots of insurance agents out there that do not understand what an HO6 policy needs. And there's a lot of agents that do not pull the master HOA policy every year. But there's no way for me to insure the HO6 policy without knowing what the master has. So they go hand in hand. And especially with the world changing as it is, we've got to know. And if that changes midterm, our clients are sending, hey, this is what came in the mail. This is what I got an email on. We're doing the research. We put a lot of time and effort into checking those things out and calling the insurance agents. And they can be American Family Farmers, CB Insurance. There's a ton of them out there. And they're all written different. Every company has a different piece to it, which Rhonda will go over. But how does that affect your unit owner, that HO6 piece? And loss assessment is the biggest concern. The next item that can also be a big deterrent for HO6 people are water claims. First of all, water claims are the worst claims ever, because we never know until the claim happens what took place. Now, if you've got a townhome or a condominium where they're stacked one on top of each other or side-by-side walls, where does the water come from? Who owns those walls? Who is the unit owner of those pipes? Well, it goes back down to, we have to get back to the HOA, the master policy. We've got some that are 3 and 4, 5, 6 stories tall, and the unit above their water is leaking in their pipes, but it leaks into the bottom unit. Who's responsible? And that gets people very confused. Most of the policies is the person that has the water damage is the one who ends up taking care of things. So it kind of varies. I'm not sure if upgraded windows, I didn't catch the whole thing. I'll have to come back and look at that chat. So interrupt me if there's something in there you want me to look at real quick. But
Yeah,
the water,
I can read it to you if you'd like. I think she's asking if she upgrades windows in a condo unit. How do you best upgrade the insurance in the event of hail damage?
Good question.
Under the master policy.
Well, the master, if the windows are upgraded in just your unit, are the windows upgraded in the entire building?
Denny, if you want to take yourself off mute, that's fine if you want to jump in. But
because there's 2 different ways to look at that.
So I'm a standalone condo unit, and seriously upgrading the existing windows to a Pella product.
Mm-hmm.
So I want to make sure the master policy sort of covers, it would probably cover a basic window in the event of a hailstorm, but how would I cover upgraded windows?
Right. In fact, I just have this. I've got a unit owner that just, they have Pella windows, and they just had hail damage, and the repairs to his windows is $26,000. So it is very important that you check first with your HO6 unit policy and have them look at your master policy. Is yours a single family unit, or are you in a condo or townhome?
I'm in a condo. It just happens to be a standalone unit, but I'm part of a condo association.
So you're the only unit in the building?
Yes.
Okay, so is yours like a single family house, or is there like a club?
No, it looks like that, but again, roofs and walls, siding is all owned by the association.
Okay, so you definitely want to talk with the insurance people that have written the master policy. And by all means, once you have a copy of the HO master policy, the HOA master policy, you'll want to go and talk with your current HO6 unit owner to make sure you have enough dwelling coverage to cover those windows in case the master does not cover them. And the master may only cover, and I don't know because I haven't seen your bylaws or anything, but the master may only cover from its original build, may not take for betterment and additions. So
that's exactly right.
So you may be responsible and may need to ensure that under your HO6 policy and increase your dwelling coverage.
Okay.
So that's a big possibility. If you have any questions with that and you need someone to help with that, if your insurance agent doesn't understand, please feel free to reach out to me. I don't have to quote you. I don't have to provide you insurance to provide a little guidance. So I can do that at any time.
Thank you.
You're very welcome. Was there another question?
Not for me.
Okay. Anyone else?
I have questions, but it's not pertaining to the HO6.
Okay, no problem. And I'm sure
Yeah.
Rhonda will be here shortly, and she might already be on.
Rhonda is
Okay.
actually here now, so we're ready.
Oh, good,
Your
good,
presentation.
good. Well, I'll wrap this up so Rhonda can, because she's got the meat and potatoes of this. So I'll wrap mine up. Any other questions on water backup? Because that can be very confusing. And if you want to go the next slide, Richard, I think I just talked about it anyway, and I've already gone through these already by just going through all of this. I've already talked about that, and I think the last slide I've already talked about. I forgot to have you switch slides, so I already went through all that. And if Rhonda's available, we can have her jump in.
Can you hear me? I had to unmute myself here, and my picture's not showing up now.
Hi, Rhonda.
Hi, Rhonda.
Hello.
You know, I don't.
Buddy.
Okay. Here we
It's
go.
not taking an audio for some reason. I can see all of you though.
Yeah, sorry. Yeah, we can't see the video. Would you like to introduce yourself, or we can?
Yeah,
we can
absolutely.
do the presentation when you want.
Well, my name is Rhonda Ashley, and I apologize for being late. I do it's been averaging 3 Zoom meetings a day for the last 2 weeks. So technology's not my strength, so I have no idea why we're having these issues, but I am glad to be on here. And again, I can see everybody. I know TJ, you've heard her presentation on HO6, and my objective today is to provide some education on property insurance for homeowners associations. And these mainly are those with covenants that have requirements. Insurance is not the most sexiest subject in the world. Correct me if I'm wrong. Anybody raise your hand if you just love reading insurance policies. And we know that you rely on folks like me and TJ to be your advocate, especially in the market climate that we have, which we're going to talk about in a little bit. So as TJ called the meat and potatoes, we can go to the part of the slide, Richard, that is titled Formal Property Insurance Requirements.
Okay.
I think is page 3. Darn it, I'm trying to just, oh, start video. Maybe this will do it. There we go. Hey,
Okay.
all I had to do is hit start video. Brilliant. Okay, so is everybody here in a homeowner association, right? Is that correct?
Yeah.
Okay. When your insurance carrier or your broker go out to bid at the renewal time of your association, there are several things that they have to keep in mind. It's not just, oh, let's go quote a building limit. Your governing documents, as TJ talked about a little bit, dictate, they have an insurance section that states the minimum requirements that the board has to make sure they are in compliance with. And the older the documents are, if they're older than 20 years, they can get really convoluted. We've seen a lot of very confusing documents. And so it's important to be in compliance for the board's protection and the association's protection. And so you want to trust that your insurance representative is very familiar with those and very compliant. And sometimes, especially as the markets are right now, you may not be able to be compliant. For example, some governing documents say that you cannot have a deductible higher than 10,000. And wind-held deductibles now are higher than 10,000 for master associations. And so your broker and representative need to give that information to you and say, look, you're not compliant here, but there's no such option, and have that documented, because you don't want somebody later to come back to you accusing you of something that you had no control of. Kiowa, that's your Colorado Common Interest Ownership Act, is actually, compared to most states, doesn't have a lot of strict requirements, but it does require that you insure to 100% replacement cost. So you can't technically, to be Kiowa compliant, if you're a Kiowa community, that means that you were after 1992, and there are unit size minimums to meet Kiowa and a couple of other things. But Kiowa, even if you're not a Kiowa community, it's a lot of attorneys, HOA attorneys, try to stay within that guideline. Kiowa says all unit owners must be a named insured on your general liability and your property policies. It says that there must be a waiver of subrogation against the unit owner, meaning that if the unit owner doesn't turn their heat on in January and there's a freeze and the pipe explodes, the master policy cannot go after the unit owner. That's a condo form requirement, and it's a Kiowa law, and that upsets a lot of boards because they don't like it when there's claims experience on the master policy. But that's a very strong reason for that. Kiowa says that your money as an association must be insured. Your reserves. Think of your assets that are in the bank. If you have CDs, money market accounts. Kiowa says your reserves plus 2 months of monthly dues are the minimum requirement for your crime fidelity limit. That's money that could be stolen by a board member, it could be stolen by a committee, it could be stolen by a property manager, it could be stolen by a hacker, it could be stolen by an insurance agent, it could be stolen by anybody, and you want to make sure that money is protected. And so those are minimum requirements that your insurance representative needs to be aware of and to help the board be compliant. And then lender requirements. Mortgage companies, Fannie Mae, Freddie Mac will not give a loan if the deductible is higher than 5% of the building limit. Well, that's pretty darn relevant to our area where we're seeing these high deductibles, and some carriers are quoting 10% wind-hail deductibles. So that's something that you need to be aware of, or your representative needs to be aware of. These are all things that have to be taken into account at the time that your representative is going out to get quotes. Okay, any questions that I can answer in that regard?
Are you going over more property, or is this, because I had a question about exactly what property is considered within an HOA.
We're going to go over that. Actually, that's coming up very shortly.
Okay,
Yeah.
perfect. Okay, great.
Yep. All right, Richard, we're ready for the next slide. So the fundamental in insurance contract, that's your insurance policy, is two things or three things. It must be a direct physical loss. There must be damage to the covered property. It has to be covered property, and it has to be a covered cause of loss. So anytime you're thinking about submitting a claim, these are the three basics out of that whole long contract you look at. These are the three things that TJ and I, a lot of times, even though we're not claim people, we kind of zero in on, and what those are the questions that we ask, okay? And moving on, this is going to answer that question. It's a covered property, which on the next slide, Richard. There's a slide before that. Oh yeah, there you go, covered property. So typically, your master policies are intended to cover your buildings, okay? So that's your residential structure, and sometimes there are commercial associations combined with residential associations. Additions, your fixtures outside your units, your permanently installed machinery, your appliances, even not contained in the units, your outdoor furniture. And then in the unit interiors, this is the insurance section of the declarations that your insurance representative really has to zero in on. What does the association want as far as the unit interiors that are part of the building? And that goes to the building, you know, the cabinetry, fireplaces, flooring, attached fixtures. And insurance companies will cover those if the declarations intend to do so. Okay, any questions on that?
Yeah, I do. In reading, you know, our declarations, it's very vague to me. I mean, we do have the term fixtures. We're supposed to be a complete HOA coverage, right? If you turn the building upside down and shook it, right, the HOA insurance is supposed to cover everything from a replacement cost. We hired, we used to have a broker who would go out and, right, only shop a couple places. We paid an enormous amount 2 years ago. Last year for renewal, it was going up 20% or what have you. So I looked into getting insurance for us in and of itself. I sent the declarations to this carrier. They came in at a third of the cost. And I've always been a little dubious, right, on am I getting what I'm paying for? And I have made it painfully clear, right? These are my concerns, and they are coming back saying 100%, we are covered, right, throughout the unit. I don't see anything in the declaration specifically calling out fireplaces, granite.
That typically doesn't, no,
Okay.
not addressed.
So, but that's always been a concern of mine, given the ambiguity and the vagueness of the declarations. Moreover, the length of the, you know, specific insurance policy itself, and trying to, right, connect the dots there between them and make sure we are appropriately covered. I've been assured that we are appropriately covered. I've always had a problem in the premium and it being so cheap and what I'm paying now prior to going through a broker. So I don't know if you have any thoughts on that.
I do.
In fact, Rhonda, I think I talked to you prior to renewal, and because we were using Six and Giving at the time, and I think you said that that would overlap with you. We are no longer using them. So if you would like to get reconnected, I would be more than happy for you to review our declarations and our current policy, make sure we're appropriately covered.
And you could very well be, I don't have a doubt that you're appropriately covered, you know, but what we do see from time to time, because and we'll talk about the market conditions a little bit later, because I think that's the part that resonates with all of us the most, because there's a price point to it. But I do say, sometimes when you see a quote that's cheap insurance can be very expensive. And it's about working with specialists. We're not the only specialist. TJ's not the only specialist, but and there are a number in our state. And we have hundreds and hundreds of insurance agents, though, who are good agents, but they're not specialists at HOAs. And so what you want to make sure of is that that contract really, truly, truly does address what's, because a lot of times declarations don't require certain things. Another thing that we do as a broker, because we've done this for our companies, our department's been around since 1978, we don't always follow the declarations because there's so many things the declarations don't even state that we know that the association has to have. And we talk about that with the board. So, that's, again, so I think that's a very good commentary to make, but that's what TJ and I are here to help, I've gone up against competitors and numerous times I tell the board, look, we cannot beat that. You need to stay put. And sometimes it'll be a personality issue. And sometimes we call direct writers. It's Farmers, American Family, State Farm. That's where the agents work for the company. They're not true brokers. We're a broker. There's value to both. They're both. And we've got some really good direct writers and we've got some good brokers, right? We had a couple months ago, a direct writer competitor of ours, the board, their manager came to me and said, look, we don't trust this. We don't like this guy. Okay. Well, we'll be happy to put together a proposal. We went, I did an apples to apples comparison with their contract. And by the way, in fairness to the board, he didn't know his contract very well. And so he hurt himself there. So that's what they didn't like. That was a big deal. Understandably so. So I looked at their contract and went apples to apples and said, look, at the end of the day, the contract is going to dictate what part of how the claim is going to be paid. And you've got a darn good contract here. And that would be not good of us to try to lure you over just because you like me more than you like him. That's not, at the end of the day, you got to answer to your unit owners and your contract you have is outstanding. And so I said, maybe you go to the insurance carrier and say you want a different representative, a different person, but don't change insurance companies. So, I hope that point resonates with everybody, that your insurance contract, you want the people who understand that contract. And if that contract is not put together properly as an insurance policy, it's real easy to do, by the way. And the unfortunate thing is you find out come claim time when it's too late and there's no recourse. All righty, shall we move on to property that's typically not covered under a covered property policy? So your roadways, your walkways, think of anything on your paved areas on the ground, those typically aren't covered on the insurance policy. And governing documents typically don't require them to, all right? So foundations and retaining walls, some of these you can add back. Like a lot of times the retaining walls, we will add those back on the policy form. Foundations, you can sometimes add back. Sometimes it's not negotiable. Land is not an insurable item. Your outdoor property, you want to be sure those are on the contract, on the insurance policy. Because right now, think of Lloyd's of London's policy, all those non-admitted carriers. You have to manually, your agent has to manually add those on the policy. And so that's very important that if you change carriers and you have fences or perimeter walls, that's could be $100,000 value. That's something that has to be endorsed on a lot of carrier policies. Not all, but a lot of them. You want to make sure your agent has accounted for that and done a proper inventory. And the personal property of unit owners, yeah, that's up to the HO6 policies to cover those. That's not up to the association. The association will cover its own association property, if any. Like furniture, if you have a pool and you have some outdoor furniture, fountains, things like that. Okay. Any questions on that? Probably no surprises, right?
Well, I just have a couple questions. Would trails be considered walks? Like if there's a trail? Yeah.
Because if you think about it, the trail's always going to be there. How do you value a trail when you insure a property on a trail? How do you value that ground? If you have a wildfire, it is going to look different after a wildfire, but the ground is still there.
Right.
considered insurable. And like it's just with a home, if a tornado just takes a home and lifts it off the ground is still there.
So a trail would be covered under property
No.
then?
No, a trail is not. It's
Yeah.
the ground. Now,
Okay,
liability
sorry.
coverage, which we're not going to talk about today, but when your insurance companies are asking about trails and things like that, they're talking about the liability side because they're thinking foot traffic, and because the chance of getting sued for bodily injury increases if you have a public trail that's nearby your homeowner association, but not from a property standpoint.
Okay, and then entryways, would that be considered like outdoor property, like signs and fences and stuff?
Right. So right. Well, you know, when you'll have maybe a beautiful monument sign outside. A lot of markets automatically cover that, and you don't even have to ask for that to be covered. A lot of markets don't, and you have to add it on. So those can always be added if they're not, but you need to make sure that they're on the policy, that the policy recognizes them as covered property.
Okay.
I had a question regarding landscaping. Our prior policy, prior to the fire, did not cover landscaping, or if it did, it only covered 10,000, whatever. I wasn't here at the time. But nonetheless, in our renewal with a different carrier, the landscaping as well is not covered. That is typical, right?
That's very
is it-
typical. Very typical.
Yeah.
The
So how
exception
typical is it that they will cover it, right? At
The
an
exception to the
additional
rule, I only know a handful of carriers that'll do landscaping. Just like what you said, some of them might give you 5,000 or 10,000 landscaping coverage. Philadelphia Insurance will give you 25,000 landscaping coverage, but most of the time it's not covered.
Right. Okay.
How do you value property that is on, like say if you have a gazebo, how do you value that? How do you come up with how much that's worth when you're insuring your property?
That's a great question, because that can go hand in hand with a lot of other outdoor properties, right? So what we like to look at reserve studies. We know that not all associations conduct reserve studies, but the reserve study helps your agent look at all the itemization of the outdoor property and what the replacement is. Because remember, many declarations state that the board has to insure all association property. And a lot of times what we're seeing this year, a trend is the boards are saying, we're trying to save money, and so we don't want to insure that fence there. That's we don't want to insure that irrigation system over there. And we tell them you'll be out of compliance with the declarations. So then
I am thinking that ours has not been insured for 20 years.
On the gazebo,
The gazebo and the tennis courts, I don't think the physical, we've always had the general liability, but we've never had the property insurance.
okay. Well, if your declarations don't require it, you don't have to cover it. That's something you'll want to ask your insurance representative, and you might want to take a look at your declarations. And if you want me to look at them too, I'd be happy to do that. No, I mean, this is not a sales presentation. We're here to advocate.
No, I know.
And we're here to help. So if you want my help to look at that and give you some advice, I would be happy to do that. It won't take but 5 or 10 minutes to do.
Okay.
Yeah, but it doesn't cost much to insure a gazebo. It's pretty inexpensive. The problem is these carriers have minimum premiums. So if all you have is a gazebo, the insurance company says, well, we're charging a minimum premium of $500. That's a typical minimum premium. I don't know if you see that, TJ, but we see that on our association side for outdoor property.
The HO6 has a minimum, but most people go over that, so we rarely see that on the HO6 side.
Okay.
Okay.
So Rhonda, you brought up something that I'm confused about now. Minimal premium, meaning there has to be a certain amount covered under property.
Right. So carriers typically have a minimum premium just for the cost of doing business because they issue a policy, they're underwriting. So it depends by carrier. Some of them will have a minimum premium. Most will have a minimum premium on general liability and minimum premium on property. So if you just add a gazebo, a lot of carriers say, well, we're not going to just charge you $27 a year. We're going to charge you a minimum $500 for all your property. And if all you have is a gazebo, you're kind of penalized because you've got a small piece of property. If you have a lot of outdoor property, that $500 minimum premium doesn't mean anything because you've already surpassed that $500 minimum premium. It's when you have one piece of outdoor property or just a little bit of outdoor property where it would be seen as a penalty because you're actually paying a lot of money for just having one thing.
Right.
Correct. So if we have, say, monuments that are worth like $20,000, you know, and we have a reserve that will cover that, wouldn't it make sense to not get those covered?
As long as your declarations don't state that you have to cover commonly owned outdoor property, that's fine if the board decides.
But since there is a minimum premium, maybe it would be wise to put them in there then, right? Is that what you're saying?
The minimum premium has no bearing on that decision. That shouldn't be
Okay.
that has no bearing. There's no tie to that.
Okay. But even if you don't have any property to insure, you still have to have a minimum premium?
If you have no property to insure, then you would have just a general liability policy.
Okay. So then
And
there would be
usually
no
is a
minimum.
minimum premium on general liability with the markets. They usually start at $500.
Okay.
Yeah.
Okay.
And just for what it's worth, they typically will base it on the number of units that you have in your association. Okay.
Okay.
So large associations, again, they'll rate up to $5,000. Well, that 500 minimum premium is a non-issue because it's a $5,000.
Right. Yeah.
But if your association with 20 units and the rate is actually under the 500, you still have to pay that 500 minimum premium. And that's when it applies. So it's kind of for when you have the small associations with the small amount of property that really those minimum premiums are more impactful.
Okay. Thank you.
You bet. All right, shall we move on? Standard exclusions and limitations. So yeah, there's a number of things that it's important to know, and some of these you can actually buy back. Ordinance and law is a standard exclusion, and it's paramount that all associations have that coverage. And there's money, there's costs to have an ordinance and law. So a lot of times when we are quoting something and another broker wants the business and you've got two competing companies, and sometimes when the premium's too low and too good to be true, we'll look at it and they'll have left out ordinance and law coverage. And once we educate the board says, oh no, well, that needs to be on there. And what that means is, think of, like with homeowner associations, think of a condominium building that's got 20 units in one building. And let's say one of the homeowners has a fire, and that fire not only burns that unit, but it goes into 10 other units, and it turns into half of the building being destroyed. And the other half of the building having some smoke damage, but truly intact. I mean, it's just like 50-50. The fire marshal comes out, looks at the building and says, this building is going down. We're going to demolish this building and have the builder restart because we have safety issues. This is not safe to even try to rebuild this building. If you don't have ordinance and law coverage, the half of the building that wasn't damaged, that got demolished, guess what? Guess who pays for that? Not the insurance company. The association has to pay for that. So that's why it's extremely important to have that coverage. Why I say no matter what your governing documents say, we will not quote an association to cut corners without that coverage. Another even just as important reason to have ordinance and law coverage is when you think of a fire again, and think of a building that's 20 years old. And in the same case, it was a 50-50, but this time the fire marshal said, we're not going to tear this building down. we're going to have the builder come back in and just add those units back on, okay? But there's been some code changes, and on the other half of the building, even though the one half doesn't have it, they have to put sprinklers. Is there an additional cost to put those sprinklers in? Absolutely. If you don't have ordinance and law coverage, guess who pays for the cost to meet code requirements? That comes out of the association's pocketbook. That's called coverage C. So ordinance and law it's one of the most boring terms. I've been in insurance for since 86, so 34 years. I came to really learn about the importance of ordinance and law when I started working with homeowner associations. So I'm in my 7th year with CB, and it's just one of those aha moments a lot of the boards have when we tell them about the importance. Earth movement, that's earthquake. That's a typical exclusion. You have to get it. Some carriers will endorse the coverage on, and sometimes they won't. And your broker has to go out and get you a separate policy. Nuclear war, military action, governmental action, those are always excluded. Those are not considered to be insurable, and you can't get that policy or endorsements for those. Water, flood coverage, that's something like earth movement where you can buy that coverage back, either via endorsement or a separate policy if you want to get that coverage. Fungus and mold, that's considered an uninsurable event. And a lot of insurance companies will give you a little bit like $5,000 to $20,000 to remediate that if you have a water claim. But if a unit owner calls the board and says, I have got mold in my unit, it's not covered. And their HO6 policy isn't going to cover it either. Wear, tear, deterioration, neglect, those are uninsurable. Mechanical breakdown, those are typically, that's excluded, but you can buy it back very easily. Pollution, you can buy it back. Usually it's a separate policy. It's not an endorsement. Faulty design, planning, materials, maintenance, that's an uninsurable item on a property policy. That's something that you have to go back to whoever, like your contractor or architect. You have to go back to their policy to be reimbursed and indemnified. Water from continuous seepage or leakage. This is a big, big one. If you have a unit owner with water damage that has been a slow leak for weeks and months, the carriers are typically going to exclude it. The intent is sudden and accidental, and that is the under 14-day rule by most carriers. Water if failure to maintain heat or winterize. This is a lot of times a sneaky little endorsement, so your insurance representative has a duty to inform the board if that is on there, that needs to be communicated to all homeowners, because they can possibly get that coverage on an HO6 policy, and TJ can speak on that. So that's something that there is a possibility, but it's something that has to go to a different mechanism. Would you say, TJ? Yeah.
Correct.
And interior water unless first exterior damage by a covered cause of loss. What that means is, think of 2 different water claims from a hail, let's talk about hail. Scenario 1, hail hits the roof so bad, the velocity, that it's damaged the roof and and the whole integrity of the roof now is gone. And then rain comes the next time and now water seeps in because of the damage caused by that hailstorm. That water damage is usually intended to be covered by the master policy. On another hailstorm, and it's not such a bad hailstorm and it really doesn't do any damage to the roofs, the roofs are fine, but someone's got their window up and the hail goes through the window, but it melts very quickly and it causes a lot of water inside the unit. That's not covered because it did not cause direct physical damage. It actually went right into the window. So we see a lot of when gutters are jammed up with leaves, sometimes there'll be some water damage from backup of the water. A lot of times that's not covered because there was no direct physical damage done by the water. So water can be a pretty contentious topic when it comes to master policy contracts. Any questions? All right, so let's move on. Association property considerations. So I talked about on the property, you want to make sure that if you have outdoor property, that that policy does address it. That it's either included in the building definition or it's added via endorsement and itemized. Okay. Your 4 options for your units, really it's 3 options. It's bare walls, original specifications, or all-inclusive. And we talked about earlier, I heard, you were talking about taking a home up off the ground, turning it upside down and shaking it, and whatever doesn't fall out is covered by the building. That's all-inclusive coverage. And bare walls coverage, I mean, there's advantages and disadvantages, and that's another presentation, but we're educating boards quite frequently right now who are looking at amending and restating their declarations, and we're trying to educate them on the pros and cons of each. You would be amazed at, or maybe it's just me because it's insurance. My husband says it's a boring world that I live in, but it really is fascinating when you find out there are some material differences and how it impacts the cost and how it impacts your loss experience. These are important things to consider if you ever amend and restate your declarations. Your specific coverage issues, special causes of loss. Kiowa says that you have to have a minimum, what you call a broad form. That means it's going to have named perils. What you want is a special form, because it indeed is special. Special used to be called the all risks form, meaning if it's not excluded on the policy, it's covered. So a good agent will make sure that your association has a special causes of loss form, which is the broadest form you can have. And blanket coverage, without going into too much detail, ideally you want to get blanket versus scheduled on your buildings because it's a little broader, quite a bit broader if you have a partial loss, okay? Agreed value is actually a Kiowa requirement, meaning no co-insurance. That means if your buildings are valued for not market value, valued at cost of construction in this region for, let's say, $5 million, you have a duty as a board to insure it for $5 million and with no co-insurance penalty. And replacement cost valuation, the converse side of that is actual cash value. Actual cash value applies depreciation if you have a claim. You don't want that. Replacement cost gives you new. So if you have a roof that's 10 years old and you get a hail claim and you have replacement costs and you have to completely replace that roof, you're getting a new roof. They're not going to say, well, your roof is 10 years old, so we're going to apply 10 years of depreciation and we're going to pay you the difference. No, that's the value of replacement cost coverage and why it's so important, both on the master policy and on the HO6 policy for the building, okay? And any personal property as well. Your deductible type and amount, the markets are driving this. If you ever think that the insurance agents like us, TJ and I, have a lot of leverage on that, we don't. These wildfires that are going on, these hailstorms are going on, they're driving it. And you don't want to have too low of a deductible because all it does is hurt your loss history on your association. We always recommend something in the middle or a higher deductible. Let the unit owners carry the proper HO6 coverage, and let's only pay the big losses, if any, on the master policy. Inflation guard is important. A lot of declarations require an inflation guard, and you'd be surprised how many are not in compliance to that because the board is not, they're not licensed agents. Their duty of care is, it's not fair for a board to know what all of these mean. You're relying on us. You're relying on your insurance experts to make sure that the policy has inflation guards so that you are properly keeping up with inflation at a minimum on your building limits. And reviewing policy exclusions. Sometimes there's some exclusions that carriers will put on that are very, very, very material, and it needs to be, if it, you know, we had an association recently renew that it was more of an underwriting parameter, but it was about grills. But it said, the exclusion said, if you have a fire claim caused by charcoal grill on, we're not paying it. So the unit owners needs to be passed on to the unit owners. Highly important. So your policy endorsements, we talked about equipment breakdown, ordinance or law, all the list here below. Your master policy is always primary. That's Kiowa law. That's a condo form on the master policy. The HO6 policy that TJ talked about is always excess over the valid and collectible component of your master policy. Is this not fun or what? Some good stuff?
Good stuff.
Yep. And so, but see, you know, these are the things that, again, we want to make sure, we being insurance professionals, it's our job to take care of you as board members and owners of your community. All right, Richard, I'm ready to move on to the next. Let's get to something sexier. Market trends and issues. Yes. I think this is something, if you think anything out of this presentation is important from my presentation, the market trends. Let me tell you, this year I am the Debbie Downer of insurance, and we all, not just me, but with the rates are going up, the deductibles are going up. A lot of carriers are pulling out because they're losing money. It's a lot of fun. Let me tell you, when I have to go into a board who's not had a claim in 10 years and their premium has gone up 65%, because that's the best the markets are offering. And that is the reality. So I look at it as my job to, when I'm advocating for the board, I know the board has got bullets coming at them from the unit owners, because a lot of times, most of the time, that's affecting their monthly assessments, their monthly dues. And that's not a good translation, and it's out of everybody's pocketbooks. So your insurance representative better make sure they leave no stone unturned in the marketplace, because the board has to answer to that at the end of the day. So the things that are being taken into account right now, some things you can control as an association, some things you can't. Can you control the age of your buildings? No. I mean, they're there. That's how old they are, and we all get older every year, a year older. Rentals. You would be amazed how important rentals are. A lot of markets, if you have over 30 or 35% long-term rentals, they won't touch you. They won't quote. So go somewhere else. Short-term rentals, bad word. Once the word short-term rentals comes out, you really shut down a large number of markets that would otherwise be willing to quote. Anybody curious as to why that is?
I am.
So renters in general tend to, even the best renters, you know, you don't want to give renters a bad name, but tend to not take as good a care of property as owners do.
And that's with the short-term rentals as well?
And short-term rentals, that's the factor, and also the liability, because you have a lot of people that you don't know who are coming and going all the time. And so that the short-term rentals, that's why it's both a property component and a liability component that the carriers don't like. Brush zones. So the by the way, statistically, there's a, if you Google CoreLogic, CoreLogic, they are a resource that insurance companies, most companies use in actuarial data formation, risk management, loss control. You want to be the nosy Nelly of a risk in Colorado Springs and you're in New Jersey, you go to CoreLogic and it'll tell you everything. And we at Colorado Springs now have an infamous statistic with CoreLogic. As the 2019 report, they're always a year behind, rates us as number 10 city in the country for a major wildfire catastrophe risk.
Dang.
Okay. And so carriers don't think partial losses when they think wildfires, they think total losses. They think that if a building gets hit by a wildfire, the whole community is going down. So that scared some of the markets. We didn't have any material market pullouts this year, but we've had them since I've been at CB. When I started 2014, we've had several markets pull out every year. But the good news is you tend to have markets that come in and replace them. So you have hungry markets that want to write the business. We're seeing non-renewals. And if you're, if you get a lot of water losses, that's why I say a higher deductible is something to consider to try to keep that claim from being filed on the master policy. That's something the board has control over. Carriers are not only putting the percentage wind hail deductibles, but they're putting water deductibles on. And that's a good thing to do. Again, that's to push back that on TJ's HO6 policy, push those water claims on her policies.
We see quite a few.
They do. And then more restrictive carriers. So the carriers now are saying, okay, we'll play, we'll give you an offer, but you're going to have more skin in the game. And we're going to apply depreciation on your roofs if you have a claim. Or we won't give you all-inclusive coverage. And that's been a big trend. So it's a tough time right now for everybody, because everybody I buy homeowner insurance too, and our rates have gone up. We're all going to pay, and it's not going to get better for a while, thanks to the wildfires that we have here in Colorado and California and the August 5th hailstorm this year. This is why I am the Debbie Downer. But we want you to be educated. We want you to be informed. And, when I say we, this is our job, because you have a fiduciary responsibility. Is everybody on this presentation board members? If you're not, that's fine, but I speak to the board a lot.
I'm not.
And your board members have a high degree of responsibility, and they're relying on the experts. They're relying on your HOA attorneys for legal advice. They're relying on good vendors there that are quality, that keep bad things from happening, like good snow removal companies, good roofers, those types of things, and good quality insurance carrier partners and brokers. So that I can't emphasize enough the importance of really relying on your experts to be there for you and help you, because again, we know the bullets are coming after the boards, and we know the unit owners are getting pretty upset about these rate increases. Any questions I can answer on that? Ordinance of law, we talked about this. So this is just covering, we talked about loss to an undamaged building. You've got demolition, and you've got your increased cost of construction, which is your code. We can move on. We misspelled it there. And then we're back to TJ's on the HO6 for unit owners.
Hey, Rhonda,